Good afternoon, traders. This is Christian Fromhertz, Tribeca Trade Group, and it is Monday, March 16th. So another nasty day for the indices today. SPY finished down just about 11% for the day. Qs finished down 12%. IWM finished down over 13%. That's the small cap ETF. So I am running out of adjectives to classify this market. And if you're looking at the, we're looking at the S&P futures in front of you, and several things to point out here. Number one, the price action. The range of these days is getting greater than what we saw in the previous week, right? Here's what we saw just a week ago when we thought the price action was pretty nasty, and we've got another three really big bars again. So after we saw this last time, we took another leg down. So I'm not sure that that's going to happen for tomorrow, but these are kind of wait and see markets for the time being. I will show you what kind of I'm thinking. Another just observation before I get into that and overall strategy is something that I think I've talked about before, but the 5-period moving average. I tweeted out a chart on this. I also put it in the trading room today. The 5-period moving average is something that and it's the exponential moving average, but it's something that I really use a lot. When we're in a trend, right? Like, so for example, in October was basically where this uptrend really kicked into high gear, and for the most part you could see price kind of stayed above it. We had a couple things, a couple little clawbacks or digestion back in the beginning of December, but for the most part, and especially back in the end of January as well, and then we continued higher and price remained above it. So it's really good for just giving you a guide for what the really short-term trend is. Back then, price was above for months, except for a couple of those little blips on the screen where we digested a little bit. But since this was 221 when we lost. When price started to duck under this 5-period moving average, there was one quick take back, and which failed. But so price went back under the 5-period moving average on March 5th, and we haven't seen it return since. So if you're looking for some confirmation, that's one thing that you could use to say, hey, maybe the bottom might be in the short term. Again, it's a 5-period moving average, so things can flip like this really quick, and if that does happen, you do have to stay pretty disciplined, right, so that you don't avoid another waterfall type move down. So as always with anything, right, you have to stay disciplined. But that's been pretty good, and I just thought it was something to keep in mind with this. Remember, of all the headlines that are going on right now, which this has been like it's today was another day where we're hearing all different types of headlines on what different states are doing and how they're closing things off, and more cases and so forth. If this noise is just too much, right, to the point where you can't concentrate, watch the technicals like that can kind of give you a guide, because I do think whenever this ends, and of course we hope sooner than later, price is going to figure this out before you're not going to get a headline that's going to say all clear. I think that's going to be the case. So my checklist from this weekend, there's really not much to kind of add here, guys. It's basically, I would like to see the VIX go back below 50. I mentioned 55 in the weekend note, but really 50 is something that I'm looking for. Note the same type of, using that moving average as well. It was something that I pointed out on Friday that we still have not seen the trend broken yet, right? We were making headway, but that's not the case, and it's pretty amazing to see the VIX back at like an 83, which is very close to the height of what happened in 2008. So very, very ugly to see something like this, and I know it's not easy to say this, and again, everything I'm talking about is for information purposes only, not giving out any advice or recommendations, but Being on the sidelines is I know it's not easy to do, but that's basically the best spot to be. I mean, I put in a couple. I added a couple positions on Friday, and the for part of the day they were fine. Those positions were basically I was about flat in those positions from where I added them on Friday. But this big move in the last hour, 2 hours, big sell imbalance on the close, took those positions under. So I did not stop myself out of those two positions. I gave myself a little bit more leeway. I'm using a stop on the weekly chart, but those positions, right? I mean, if you're adding right now, it's going to get painful in the short term, and it's been painful in the short term. So here's what I did. I'll show you what I did for the day. But again, the VIX 50. I would like to see again, price get back above the 5-period moving average. I talked a little bit about sentiment and so forth. Other things that I just kind of put in this commentary channel for the day, you just again like making a lot of observations. If we just go through today's price action, it's basically some of the things that I was talking about last week and observing. I talked about how this market you could play the bounces, but you have to realize that once the bounce is over, we're just seeing like for the most part, once the bounce is over, it's a complete shift, right? And we could see that in the VIX. Once the VIX basically kind of, and this we didn't even, this didn't even break below the 20-day moving average, but once it kind of comes back, right? Here's where it came into, and it started to accelerate back up to the upside. And once it did that, it just never let up for the day. And that's been the case, is that we're not getting too many like in between trends. It's a bounce, and then a lot of times then we just go down for the rest of the day. And one of the things that I mentioned last week, I continue to see like the bounce trades. Like if you're trying to play things to the long side, the bounce trades, can work. You got to stay very disciplined in them. But change and trend changes are not like if you're looking for a certain change. Like so, for example, Microsoft today, right, which was a name that was like close to the top of my watch list for the week. 5-bar, you got the bounce, you got a little bit above value on the 5-minute. But if you switch over to the 1-hour, what you're going to see on the 1-hour is not one bar closed inside value, right? And I use the 1-hour for trend changes, right? Notice on Friday we could not change the trend. We tested it to the bottom of value and failed. We did it again today. I had even tried a trade before this bar closes, because keep in mind on the hourly closes, the first 10, 15, 20 minutes can look great, and then I put my stop right outside of here. And got stopped out in that trade. But again, these are telling you that we cannot reverse the trend. So it's very difficult. We've seen a couple situations over the last 2 weeks where it's been very brief, where price has been like trying to retake, or trying to reverse the downtrend, and it does it. It can do it for like very short periods. Let's see if I go back to if I use the 180. But they've been few and far between, and for the most part, we're failing at places like here, for example. Actually, that was back in February. Sorry. No, we have not actually. We've tested. If you look at this 200-period moving average, since we broke it, we've tested it here, kind of tested it here. We tested it here on Friday again, but we couldn't even break inside value. And also like using the value areas. Here, not only was this a test of the 200-period moving average, but it was also the test of the top of value. Here was a test of the bottom of value. So we're not retaking any ground, right? We're just kind of going back up to a resistance level and failing at it every single time, right? And that's just one stock, but I think it's a situation in most big stock, larger cap names right now. Personally, and this is where once we got to the afternoon, I said I'm not really seeing many signals right now. I'm continuing to monitor different names and so forth, but sometimes when forcing trades in this environment, so I think everybody's done that, right? They force trades sometimes when they're not there, and when the VIX is like at a 15 or 20, if you forced a trade and you messed up and realize it wasn't a good trade and you get out of it, it's not a big deal. Now with the VIX where it is now, where earlier it was 70, now it's 80, if you don't if you're not able to realize that mistake very quickly and get out of it, you're gonna get like hit over the head because the volatility is so much greater, right? It's a big change from what we have seen. So any mistakes right now, and everybody is human, right? But if you make a mistake, you have to realize it very quickly and don't compound the mistake and kind of sit and be stubborn. So anyway, but then I started to say, right around 2 o'clock, I said, really, it feels like what we saw last week. Same type of price action. Now, one of the things that I was talking about, like, because I use the 5-minute bar to day trade, as well as that 1 hour, which I've been going over. But I've been seeing the same thing. Like once that initial bounce is over, what happens is the sellers are really controlling the market. And what we're seeing is, if you look at any 5-minute bar, right, we go back to the S&P, really like at the pivot points, right? So for example, like a pivot point here in the S&P, right here when the market's trying to turn. This was originally a green bar for about 2 or 3 minutes, and then all of a sudden, the sellers are crushing it, so that the market is failing at a pivot point. Tried to do it here as well. There was some type of big, it looked like, and I guess here is where we were also, there was, I don't even know why we went up this much, but again, we're failing on the turn. Failing on the turn, failing on the turn, failing on the turn, failing on the turn. So this is like, it's a combination of things where there are big sellers in this market, and they know where this market would bring out buying, and they're not letting the charts turn to bring out those buyers. They're being very forceful with and not letting that bar at a pivot point turn green. Because again, that would show a little bit of confirmation. It would mostly bring out some buyers. So they're making sure that to keep the lid and pushing this market down. Now again, there could be various different parties who are doing this, but I still feel that while there's of course high frequency guys who are gaming the people who have to do things, but there's still quite a bit of liquidation that is going on. So that was the one thing that just kind of bring you through some of the comments, because I think these are helping to kind of realize the situations. One of the points that I made in this weekend's video, and that I talked about last week as well, is that the institutions, right, have to think that this situation is a buying opportunity. We are not seeing that yet, right? So, most of us are retail traders, but we're not going to be able to push this market around, regardless of what we think in our opinions. You have to wait for that institutional support that they are coming in and they're taking a stab at this market, and I just haven't seen that. What I think the majority of the bounces that we've been seeing are short covering, right, where the shorts are getting worried if there's some announcement and they're going to quickly cover, and then there's no follow through on that once they're done covering. So the long only type funds, other than what I've seen in ETFs, which are mainly pools of retail investors, a lot of RIAs who are causing the inflows to ETFs. It's not your big institutional money managers, hedge funds. They're not coming in and buying this market yet. So again, have to sit on your hands a bit, and that's been, I think, the best thing to do right now, and wait for some confirmation. And I know sometimes we've come really close to seeing it, but that's kind of the danger. And here's how I'm trading this market. Again, it's nothing different than what I was doing last week, other than I bought a couple things, as I went over in the video. I did quite a bit of day trading at the end of the day, but I tried a little bit of Visa last week, on Friday, but other than that, it's all straight day trades, right? And I'm really trying not to be greedy. Even like I was trying to trade work, and as soon as I saw the market start to turn a little bit, I took a target. I forced a target here in work, And then it actually got to my target, which is basically what I said. I was looking for 1885. So again, being very realistic with the targets that I'm trying to hit. Every day trade I get into, if you notice what I'm doing here, I'm mentioning where is my stop price, right? Because I tried this Microsoft. Right, so the stops and the ones that don't work are important to emphasize here, right? Because where did Microsoft end on the day? 135. So again, pre-planning these things out and staying disciplined. And the second to the so I think I strung together like 3 or 4 really nice trades today, and then the last 2 stunk. But I basically, you could see what I did from basically 12 o'clock on. Very little trading. I didn't even try the end of the day, even though of course shorts would have been ideal in the situation in the last hour of the day. But so that's it. And if it's not there, and if you're not seeing the signals, don't trade just to trade, because a mistake is going to cause you more of a bruise than it is when the VIX is where it was a month and a half ago, right? So keep that in mind. All right, guys, that's it for today's video. It's just one of those things where you really, I keep mentioning, like in my end of day note and in the morning note, I've said it now probably, I don't know, 7 times in the last couple of weeks. Capital preservation is important right now. This is no joke. We're at an 80 VIX. We're at an 80 VIX. That is crazy. That we haven't seen that since the last time we saw that was the height of the financial crisis in 2008. So in that situation, like, capital preservation is important. I will continue to do what I'm doing on a daily basis. Right now, until things change, is to day trade. But that's basically it. There's just too much. It's moving too fast, and this market, I think, just needs more time. And we'll be watching things. I'll be watching things for confirmation. And if I get confirmation, I'll be doing something different, and I'll be adding risk into those situations. But we're just not there yet. All right, guys, have a great night. See you tomorrow.